Welcome to the Weekly Ledger. This is a brand new video series replacing the weekly breakdowns to give you guys a full analysis of the week ahead. We'll be covering a market recap, looking at catalysts and risks, as well as my trade of the week that I will be looking at in the coming days. So let's start off with the market recap. What did we see over the last week? So 1 week returns. The majority of coins pretty much went nowhere over the last week. Nothing too interesting to report from a price change standpoint. Nothing much really moved, especially altcoins. Volatility is getting crushed. We're not seeing anything big to the upside or the downside over the last 7 days. And when we look at even the sector performance, you've got AI, DeFi, layer ones, layer twos, memes, gaming, all within that -2 to +1% price change over the last week. So not much to report on the price change stand of things. So let's take a look at the markets. What are we seeing on Bitcoin? So starting off with the weekly chart. For those higher time frame traders, what have we seen? Well, there are good things and there are bad things about the Bitcoin chart right now. Starting with the good things, weekly market structure is perfectly intact. As you can see, this is your weekly market structure, which led to the new high. Until Bitcoin closes below there, this chart is still bullish on the weekly time frame. It still is in a weekly uptrend. Now, on the negative side, we did have a sweep where we failed to break out above all-time high. That got sold into and used as exit liquidity. And that has led to the current reversal, which we have seen. So as a high time frame trader, what you are looking for on Bitcoin to take your next long setup is a weekly close above this sweep to invalidate it. And from there, you can trade maybe a daily system or a swing trading system towards a target of, let's say, 140k, because I don't think if we close above that level, it's going to just stop at 130k. That should allow Bitcoin to have another decent leg up as it invalidates all the bearishness, and the invalidation of a bearish setup is a bullish one. So that's what I'll be looking for. Close above there, then look for swing trades to play it from level to level with a target of roughly 140k, but of course play it till the momentum ends. And of course on the bearish side again, you don't want to see price close below this weekly market structure, otherwise that opens up a deeper pullback into some of this tariff rally. So looking at price in terms of the weekly EMAs, we are exactly at the point where price can hold and be bullish, because these weekly 12 and 21 EMA bands have been respected previously in this trend. So if the markets were to bottom here, that would be the reason for them to do so, is to hold these weekly 12 and 21 EMA bands. But if they fail, as you guys know by now, the weekly 50 EMA, that's been our bull market support all cycle. That's been the level which holds time and time again. So on a deeper retracement, perhaps that becomes interesting, and that can move higher over time as these EMA bands do. So that's what I'll be looking at as a weekly trader. So let's zoom in a bit, because of course the weekly time frame is more reliable, but it's slower moving, so it gives you slower signal. If you drop down to lower time frames, you get a faster signal, but of course less reliable, more prone to fake out. So moving to something like the daily here. Well, your daily market structure was of course broken over here. So we are in a daily downtrend. That is confirmed. But what we have been seeing is when we topped at 123k and we dropped below that level there, we had a big momentum move down. That was the first leg of the downtrend. Then you had the second leg, which got weaker, and the third leg, the momentum weakened even more. So you are seeing bears run out of steam here a little bit. That doesn't necessarily mean we're going to V reverse and be mega bullish in the coming days, but it does show that there is potential and bulls are trying to form a bottom here. Now, the problem with that is 107k, which we bottomed at so far, has not previously been a level of really much support here. The big support has been 100k, where we bounced here, and even bounced here. 107k, sure, we formed a nice consolidation base, which led to the all-time high breakout, which does give reason for this little bounce here, so that is expected. But is it a level that leads to a high time frame bottom? I'm not sure. Perhaps those weekly 12 and 21 EMA bands do hold, and they are the big reason for price to bottom here. But on the daily chart, what you're really looking for is for these daily 12 and 21 EMA bands to flip bullish, so to flip green, because currently they are bearish. And as you've seen from the monthly outlook, in every Bitcoin rally, these 12 and 21 bands are bullish. That's a feature. Bullish throughout this entire rally. When they flip between red, green, that's when you're in mean reversion environment. You're in a range and not trending conditions. But again here, bands are bullish for the entire rally. You have the bands go red here as you get that shakeout, but as soon as they're reclaimed, they flip bullish and you get that beautiful trend. And even from 25k, bands were bullish the entire way up. So safe to say that it's a decent signal. It can be one of many signals, of course. It's not the best, but it is an objective technical trigger that you can look for in the charts rather than just guessing for a bottom. And that would be my first sign that let's look for longs on the daily time frame. Maybe it can flip to the 4 hour, look for swing longs after I get that trigger. But that is what I'd be looking for to start getting more bullish. And that would, of course, come with a reclaim of this market structure break, which we lost, and really a close above last week's high is what would be nice from a daily standpoint. And that, of course, would probably confluence with these bands flipping green anywhere around here. And that's really where I'm looking for longs as a daily time frame trader. And then, of course, you can go down lower and lower time frames, but most of the opportunity in September is setting up those swing trades for October, November, December, because really it's been a choppy market and not the best conditions for day trading and scalping. As I showed you guys in my analysis channel, this was the September of 2024. So we started off with a down move before retracing. So overall choppy month, stayed within this overall range here. You also had the September of 2023. So again, started off with a down move before retracing, and all in all finishing within the range. So choppy September, but that built the base for the rally that then came after it. And the September low in 2023 never got hit. In 2024 never got hit. So it's yet to be seen whether that pattern, whether that trend continues. And I would be expecting it to continue if we are going to see a bullish Q4, as we so often have in all of the bull market years in the full year cycle. So the September low, of course, is still in play. We don't know where that is yet. The summer low is at 98.1k. I'd expect that level to hold. Therefore, those are the clear invalidations. I'm looking for any reason to get swing long in September, because at the end of the day, yes, there's a lot of people flip-flopping saying, is it over? Or are we just beginning? Is alt season here? A lot of back and forth, a lot of indecision. by traders. And really, you've just got to ask yourself, do we have the conditions to be in cash and holding dollars right now? And the answer to that is no. There's no signs of a liquidity contraction coming. There's no signs that you should be holding dollars and there's too much leverage in the system. You shouldn't be holding Bitcoin. There's really none of that. The best choice, the best assets to hold remain Bitcoin, gold, or stocks, whatever hard asset of your choice is. And there really is no signs to being cash yet, or that the bull market is necessarily over. Sure, we have this reversal over here, but if we reclaim, if we get our triggers, I'll be looking to get swing long again. And it's not until we lose the weekly market structure, we lose this summer low over here, where I can have a think and say, okay, maybe we're looking at a deeper retracement and we can get some of those long-term investor buys. But that's more high time frame. Make sure to check out the September outlook if you are interested in that. Today, we're focusing on the week ahead. So that's what I'm seeing in terms of Bitcoin. We also have this daily 50 EMA. So currently we are below it. And as you can see, in all of the bullish rallies, you tend to stay above that purple line. Briefly, we got below it, but as soon as it reclaimed, Bitcoin went on an all-time high breakout. And as you can see, when you're below it, when the bands are red, that's when you simply do nothing. You don't try to be a hero and catch the bottom, because you could end up with one of these moves, which does cascade lower. There is always a risk of that. So that is why you wait for the triggers. And again, on the daily, the trigger will be reclaiming last week's high and having those 12 and 21 bands flip green. And once you see that, well, you're really just looking for a setup to get long with a clear invalidation below the bands, and targeting initially anywhere around 120k. And above there, of course, you've got the possibility of an all-time high breakout. So that's what I'm looking at in terms of Bitcoin. But until you get a sign on the daily or the weekly, depending on what time frame you're trading, let the market do its thing. Because as you can see, September's, they tend to be choppy. We could just see something like this, where Bitcoin goes into low volatility, chops around for the next few weeks in September, maybe even sweeps lower and goes another leg before bottoming out. And you see that September low get put in, which sets up then a base in Q4 if past cycles are anything to go by. And that's probably something like what I'm expecting in September. Not necessarily time dependent. We don't necessarily need to see a sweep. However, if we are going to be bullish next week or in the coming weeks, again, those are my triggers that I'm looking for on the daily and weekly time frame to shape my bias to look for longs. But until then, no need to get chopped up looking for longs. So moving on to Ethereum. Let's check out what's going on here. So as I said, volatility has been getting absolutely crushed. Just horrible conditions to be trading any of this chop. And look, if you have noticed your profitability has been super low over the last couple of weeks, you've really just got to understand your environment and know when not to trade. Know when the markets simply are not offering volatility, because as a trader, it doesn't matter if the markets go up or the markets go down. But what does matter is that the market moves, because if it doesn't move, you're just going to get chopped up. And this is when market makers love it, because they can capture the spread. There's no high volatility where they have to quickly cover. They're just absolutely profiting in this type of price action. So they're going to want that to continue for as long as possible. And really, there's just no setups when you see price trading between 4214 and 4489. But when we zoom out, let's start off with the weekly again. Let's hide these indicators. What have we got? Well, you have your weekly market structure here. You don't want to see Ethereum close anywhere below that level. As a weekly time frame trader, that's what keeps the weekly uptrend intact. So from there, you're really just looking for price to get back above the all-time high. And if it can do that, well, then you can trade the momentum on the daily or take a swing trade targeting any levels into 5K upwards towards potentially even 6K. That would be the trigger to look for those longs on the weekly time frame. But zooming into something like the daily, well, the daily market structure is actually over here. So you don't want to see a daily close below this level here. That would invalidate the daily uptrend. And again, you're really just in a range on Ethereum between 4K and this all-time high. And of course, the round the round number 5K, that's also an important level. So same again, you just want to see a close above that all-time high. And from there, you can potentially look for something like this. I'm not sure exactly how it's going to play out. Probably it's not going to look anything like that, but you get the point. If we close above on the daily, you can look for any longs from there to trade the momentum higher. But at the moment, you've had a sweep of the all-time high. By no means is here a good place to become a buy and hold Ethereum investor. In fact, this is where OGs who accumulated anywhere during the bear market, they're dumping on people over here as price just hit the all-time high. Therefore, you really need to see price get above there to continue the momentum. Otherwise, price is stalling, and the way this is setting up here with a consolidation that's slowly bleeding, it does look like Ethereum wants to go lower and have at least a stab at this market structure level. So make sure to keep an eye on that. You don't want to see closes below there. As long as we can hold that level and ETH just consolidates, well, as soon as we close above the all-time high, you can look for trades to potentially take the market higher. So looking at the wider market, what have we seen with gold? Well, gold has been king over the last week. Talked about this heavily. Well, we had a false breakout. Price then dumped, wrecking anyone trying to long there. But then bears, they get too confident, they start shorting. And those shorts get absolutely blown out, and it fuels this all-time high breakout. And we've closed the week right at the highs. Super bullish for gold bulls. Now, I'd expect this chart with this weekly close to continue higher. It's a 90-day consolidation. It's offered beautiful trades. And really from here, you don't want to see price close below this low, or even really take this low. Any consolidation above there should lead to a new move higher. And this, of course, has been super important in terms of Bitcoin, because the higher gold goes, typically Bitcoin underperforms, but once gold tops out, that then leads to your Bitcoin outperformance. So gold, super clean, and expecting any consolidation above this low to lead to continuation higher. And the targets on gold, where that will be, potentially we're looking at 4K, or maybe we stop just shy of it. I'm not sure, but I do think this chart will eventually stall out here, because the issue with gold is that, unlike Bitcoin, as the price of gold gets higher and higher, this simply incentivizes more gold mining companies to open up, or existing gold mining companies to invest more capital expenditure into extracting gold out the ground, and that increases the supply. And what happens when price rallies up for multiple years? All of these miners, they start ramping up production, flooding more gold onto the market, and more supply means price gets suppressed, and it leads to then downtrending or sideways price action. Whereas Bitcoin, on the other hand, does not have that same issue. The amount of supply coming out is fixed due to the halving because it's part of the code. You can't just increase the amount that is going to be mined. So, interesting to see how high gold goes. Of course, this is multi-year analysis here. We know China are the ones absolutely loading up on gold here. They are fueling this rally, but eventually I do expect this chart to slow down because of course it has been up only, and interesting to see what happens with Bitcoin when this chart slows down, because typically that should be super bullish in terms of BTC. So keeping an eye on September, expecting a choppy month, looking for wherever this September low gets put in, looking at that summer low as my invalidation for essentially the 4-year cycle. But overall, dollars are still trash. Inflation isn't exactly rampant. It's around that 2.5 to 3% mark. There are no conditions for a liquidity contraction, so actively looking for setups and confirmations to look for my swing longs to continue trading Bitcoin for the rest of the cycle. So that's what I'm seeing in the weeks ahead. Now, moving on to catalysts and risks. So we have inflation data, and this is going to affect the FOMC positioning that we have in September. So we've got PPI on Wednesday and we've got CPI on Thursday. CPI is generally more important. PPI shows the producer price index, whereas CPI shows the consumer price index. So looking at how much inflation is essentially hurting the consumer. And that's always more important because at the end of the day, businesses always pass their costs down to the consumer, regardless. So CPI is expected to come in at 2.9%, which is an increase from last month year on year, which was 2.7%. So inflation is expected to actually rise, but the markets haven't really cared because, as I said, inflation in between 2% and 3% is generally healthy for the markets. Stock market's at all-time high, gold's at all-time high, Bitcoin's around its all-time high. It's only when you get a huge rate of change, so you get a move from 3% inflation all the way up to 5%, 6% inflation, like we saw in COVID, that calls for a big liquidity contraction from the Fed and begins a bear market. It's only when you get those huge rate of changes where you see interest rates go from 4% all the way to 0% in a matter of months that lead to those huge moves. But when you have inflation between 2% and 3%, you're just seeing this slow grind higher in the market. So while that doesn't mean we're just automatically going to go higher, because as I'll come on to now, the FOMC probabilities have actually increased to now the traders are seeing a chance that we could have 2 rate cuts in the September meeting, whereas a month ago that was 0%. Therefore, we're seeing a lot of flip-flop. We are seeing quite a big rate of change in these probabilities for FOMC, a lot of indecision, and so far the markets haven't reacted well in terms of Bitcoin at least. Gold and stocks have been doing very well, but Bitcoin hasn't reacted bullishly yet to these rate cuts or these probabilities of them. Therefore, it's going to be interesting this week to see if that changes and potentially if Bitcoin was just lagging behind. Therefore, the inflation data could give us a good reading into the upcoming FOMC probabilities. It could change them, especially if we get a big miss to the upside or the downside. Interesting to see how the market reacts to that. So what you want to look for, of course, is inflation to come in lower than 2.9%. That shows that inflation is below what they expected, and markets should then price in an increased chance of even two rate cuts here, which may actually have the opposite effect, because if the Fed have to cut 50 basis points instead of 25 basis points, what that tells the market is the Fed are behind the curve. Therefore, it's not actually always the most bullish thing to see, especially in the short term. So keep that in mind. These FOMC probabilities, the rate cuts, they can really lead to anything in the markets. We've seen rate cuts lead to the markets pumping. We've seen these probabilities of rate cuts increase and lead to the market dumping. So what really matters is how price reacts to the changes in these probabilities. Do we see finally Bitcoin start to reclaim the 12 and 21 bands and show that Bitcoin was just lagging and it actually is bullishly pricing in these rate cuts? Or are we seeing potentially a divergence and Bitcoin continuing to downtrend despite increased probabilities of rate cuts? And potentially, maybe that means we even get a 50 basis points rate cut and it actually shows that the Fed are behind the curve and something's wrong in the system. Who knows? But we'll have to take it as it comes and react to the market when we're trading around any of these news events. Because at the end of the day, the inflation numbers, they're all fake. We all know they are, but we're all using the same data. So that's what we all have to trade off. So that's it for catalysts and risks. Essentially, watch how those inflation numbers affect these probabilities and look out for that 50 basis points probability rising. Potentially that isn't actually what you'd want to see in the markets, and you'd actually just want to see a standard 25 basis points cut. And of course, look out for even the probabilities of no cuts coming back into play and watch how the market reacts to that. So moving on to trade of the week. This will be a new section in the weekly ledger. So this is where I look at a potential setup that I'm looking at in the coming days. It's not necessarily going to play out. I will let you know if I take any of these setups, but it's generally just an idea to get you guys thinking of how we could trade the coming days ahead. And what I'm looking at here is, first of all, the value area from 112k breakout to the loss of 112k, and that gives me a value area low around that 114.8k, a point of control around 117.9k, and a value area high of 119.8k. So I'm looking for price to reclaim that daily 50 EMA first of all. That would be a first good sign, but if it does it in a very sharp way, then potentially looking to short the first retest of this value area low. That's more of a speculative setup, just looking to play that first test of resistance. Not necessarily going to take this trade. We'll have to see how the markets move live and look at the price action live to determine whether I actually take the setup. But the setup that I'd be more confident in and more inclined to take would actually be the reclaim of the value area low. And anywhere there, whether it's looking for the retest of those H4, 12 and 21 EMA bands, or simply a retest of the value area low, I'm looking to trade long with a target of the POC or even the value area high if there's still momentum. Because I think if we reclaim that, there's a good chance that Bitcoin can bounce up to any of those levels, because even a bounce to the POC or value area high still is technically not high time frame bullish and could just be a lower high in this downtrend. As you remember from the weekly time frame, we need to reclaim that 123k sweep level to actually put it back into a bullish condition. Otherwise, potentially it could just simply be a lower high, as I said, but that still allows for any decent long setups after reclaiming that level, as some shorts can potentially get squeezed. So not the best trade setups really in the coming days, because I'm not confident, to be honest, that these will even arrive. We might not even get that rally towards the value area low. We might just have a choppy week, as September's so often are. But these trade setups are there in case we do see a decent move, and that is how I will be reacting to them, and that is what I'm looking for. So again, not expecting these trades to actually come to fruition. Could just see a sideways week, but if we do, then that is how I will play it. And of course, if we get a down move, not really interested in shorting here, as again, I still think Bitcoin and hard assets are what I want to be in over cash. I don't see any reason to be looking at bear market shorts and still until we see those high time frame invalidations hit. So if the markets do go lower and don't go for any of these setups, which they very much can, as I said, these are just ideas if price does rally. But if price does downtrend, then I'll just let the markets play out and go from there. So that is the weekly ledger wrapped up. Hope you guys enjoyed it. Let me know if you got any questions and let me know if you like this one. I'll keep them coming in the weeks ahead. See you guys later.